All right, y'all. So this video is basically an introductory video about investing. Investing. Now, with this video, I'm going to be using Robinhood. That is where I first started investing with one of these apps. And I love it. I love Robinhood. It's very simple. It's the easiest one to get into. I usually do it on the phone. Do have a desktop version. In this particular video, what's going on? This particular video is not really to teach you about investing. This particular video is just for me to help you understand why you should be interested in investing. And I know a lot of y'all are interested, but I kind of want to seal the deal as far as whether or not you should, because some people say it's like gambling. Some people say, like, why take the chance? I mean, and actually, it is kind of like gambling, but depends on what you're investing in and when you're investing. And it's still a gamble, but it's like your odds are this high of losing it all or this high of losing it all. No, in some cases, you can't even lose it all. In other words, if you invest in Microsoft, what's the chances they're going to go out of business? Is it possible? Yes, it's possible. You think Microsoft going out of business? Okay. But we can't foresee the future. It's possible. So that's what I mean. So I am going into a lesson in investing. Something happened and there's a recession next week. Microsoft loses 30% of the stock price just because of everything that's going on. Do you think they get that 30% back in 2 years, maybe three? Probably sooner, depending on what's going on. But if your answer is yes, or do you think they'll go out of business because of it? So if you think they'll rebound in less than 3 years, you kind of know, just think about that, that if something happens in the economy, not Microsoft, but the whole economy, and they go down 30%, you kind of got to realize that you're able to get Microsoft at a price point per share that you could only have dreamed of. It's really a blessing, it's an opportunity. That's the way you got to look at it. And here's the tricky part. When you're in it, everyone around you, the only thing they're talking about is selling because they can't see the vision that I'm explaining right now. Only thing, because people around them are saying that this is why it's good to be an independent thinker all day, every day, not just when it comes to the market. When you're looking at the news and a lot of other stuff that goes on around you, you need to be an independent thinker. Look at the facts, look at the total scenario, and think for yourself what's likely to be true. Because people lie, news lie, all of it lie. Leave stuff out, just to get your eyeballs to look. And if you don't read it, they just said that they was gonna cut Social Security. Had my dad worried that they about to cut down Social Security. Not for him really, but for the community, for people. I'm like, Dad, I don't know. I don't know. I don't see how they can really do that. So then I go and research it. No, that ain't what they're doing. They're just cutting down on the workforce of Social Security. But the news presented like that to get you to look at, all right, I know we ain't this, all right, be an independent thinker. So a catastrophe like that happens, you should be observing. If you're thinking about investing, you should be looking at these different companies already. Now, if been a huge run up, the market just going bonkers. Everybody talking about getting in. Everybody talking about, dog, I'm missing out. Dog, I'm missing out. Oh, I need to invest. I need to invest. When that's happening, it's too late. You're signing up to suffer pain. Because if it's already ran up 10%, 20%, 30% in a short amount of time, the chances of it going back down is higher than the chances are for it to keep going up. Am I making sense? So when that happens, maybe it gets on your radar to invest, but this is what you need to understand. There's always going to be when you have things going crazy like this, and it just was like this, and now they way here. If it was way down here, That's well below the mean. If it's up here, it's well above the mean. The average is always where you want to gauge, you know? So if it's way up over the average, it's going to come down eventually. So never buy when it's the 30% drop. If something happened in recession to Microsoft, that's the time you want to buy. Because if nothing else, it's going to come back up to the average eventually. All right, I'm going to stop with that right here. And this will prove some of what I'm saying. All right, so I'm going to go through just a list of some of the stuff I got, and you'll see the price point I bought it at and what the current price is. This is not, I'll show you the actual charts, but this is more convenient for showing you these price differences. The average cost of Palantir, you may not be familiar with this company, but I bought it when everybody was panicking a couple of years ago at $7.21. It is now at $91. You're seeing that right. In a few years, from 7 to 91. Now this is not a Microsoft story. This is a growth story. They use AI and they've been using AI, but that's the thing with the individual thinker because a lot of people were saying this company was not about nothing, it wasn't going nowhere. But I looked at what it was doing, and it had contracts with the government, and it's top secret clearance, and it's using artificial intelligence years ago. So I'm like, nah, this company got potential. And I had a lot more shares in that, but I sold along the way because remember I told you if it go, this is a couple of years. So when it got like the $20, $30, I sold a lot, and that's what is real good idea to do. Is if you there's so many levels to this, but I like to buy a lot more than I plan on keeping if I think there's about to be a significant move in one direction or another. In this case, that it's going to go up soon. That way, if I buy it at 721 and it goes up to $8, $9 real quick. Well, at that time, I didn't think it would go like that. So if it go up to $8 real quick, $9 real quick, sorry, then guess what? If I get 200 shares, 300 shares, and it go up a dollar or two in 2 months, then I can get rid of 100 or at least half of it, and I done paid. Now my average is a lot less because I done took that profit and it's going toward what I paid. If that makes sense. So anyway, so far the same way. I actually just sold some of this so far about a month ago. But if this had gotten up to like maybe $20. I think it was $20. But anyway, so I only got 200 shares left, but I bought it at 740. It's at 1288. This will be at $20 before the year is out. Maybe, maybe not. Yeah, I know it'll be at 15. Now I had three different options contracts on these that they made me like $5,000. The options did. This one I got in at 427, and so far I bought two when everybody was running. When we had that huge inflation problem and banks was going under. Well, if you might have seen so far and just didn't realize what it was, but if you've seen football game and you see SoFi Stadium in the back, and if you are a millennial and you've seen advertisements for SoFi, this is the same SoFi, that bank. So I'm looking at what they're doing, and I see that they're using the internet to market, which is very much cheaper. They don't have physical locations, so and they was buying a bank, so now they're a chartered bank, and they do all other financial services. So for me, I don't care what none of y'all saying. Like I see what they're doing. This company has potential, so that's why I was up. I had 300 some shares in it, and I bought it when it was that low because everybody was selling. So I bought it, and now it's at 1288. Like I say, it was much higher than that, but creation, it was before it was in pain because it wasn't profitable. It's still not profitable, but these are electric personal aircraft that's going to cut down on the congestion and everything, especially like places like New York City and whatnot. Instead of getting the cab, you get that personal airplane, jet like thing, personal drone like air travel, air taxi. That's the word I'm looking for. Air taxi. So this was 427. It's now 871. This was 107. This was Apple back in the recession days of COVID. I had a lot more. I was day trading this a lot. I had a lot more. I sold most of, well, I sold all of it. The only reason this is here, oh no, I got 2 shares. Okay. So you see it's an odd number. That's because they pay dividends. But I sold all of it with 2 shares. And sometimes I do that. I was day trading it. So I thought I would be able to get back in again at a lower price. So I sold all of it, but the 2 shares, just in case I couldn't, at least I got these 2 shares. And I like to keep tabs on the moves to see was it the right move, was it the wrong move, and especially if it's something I like. But so I kept 2 shares just in case I couldn't get back in, and sure enough, I couldn't get back in. But now you can see that is at 217. It'll. I doubt it will ever see 107 again. But that is the power of buying when everybody else is running of a strong, solid company. That's the same example I gave with Microsoft. That's what happened with Apple. $31. Now this is a sketchy one, but it's DraftKings. You've probably seen these commercials. I know that betting is addictive. This company is not profitable. That's one of the reasons why people don't keep it. They sell it real quick. If anything happens, inflation high, they're gonna sell it. However, I think once I bought it at 31, it's never made it back down to 31. And I have more, but I did sell because it's not profitable, and well, it still is now. But last time it was shaky ground. There's other more better opportunities. So there's a lot of thinking that goes involved. But unless to not deal with all of that, you just go with something like this, something like Apple, solid company. And again, you wait until there's right now is a decent time to buy if you're buying for the long term for any of these companies because all of them are off their highs. DraftKings, you can get it cheaper than 39 with the volatility that's going on. So this is a non-profitable company, but they're probably going to be profitable in 26. Once the economy settles out, you're not going to be able to get into this cheaper because once this goes profitable, it's probably going to skyrocket. That's why I didn't want to get rid of all. I didn't want to sell what I had really, but you had to measure what you got in your account, what you want to move, unless you want to put more money in there. And I'm already using margin, which I advise you not to do at least until after you've been investing and trading for a while, so you understand it better. And that's just using money. If you got 20,000 in it, they'll let you borrow 20,000, so you can bet 40,000. You see how that sounds? It's crazy. So if you lose, guess what? You're in the hole. All right. So, and I'm going quick because I got other stuff to do, but this is a great day and time for me to introduce this to you because again, there is a window of opportunity here to get in some of your better companies right now. So I want to go ahead and put this out. For example, Ford. It's a good time to get into Ford. My average in Ford is 950. I only did it. I mean, I've been in Ford because this is one of the companies that you might keep hearing a lot. I'm excited and rushing at the same time. You might keep hearing them saying how Mag 7 has gone down and has faced a correction lately. This is when I started buying Ford, is because Ford is so low of a stock price compared to the value of the company. It's called the PE, price to earnings ratio. So Ford is relatively cheap for the money that it's making. It's a profitable company making billions. It's not going out of business. And when you talk about volatility from inflation and this, that, even though you got tariff situations that may affect it, whereas all the technology companies been running, and I bought this, like I said, I've been holding it for over a year now, boy. I just bought in a lot about a month or two ago because I was like, hey, technology is going to have a correction because it's going too high. Like I said, it got to come back down to a medium. It's way up here, way above the average. So it's going to have something you don't know why, but people start to get nervous because they know that this is ridiculous. So when something happens, a war jumps off, anything happens, the words of a war, then inflation, COVID come back, anything happen, it's going to be a sell off. So I said, I'm getting up out of here. I had Meta then. Well, that was a bad call, though. I was right at first, but then Meta shot up. Anyway, so that's when I got some Ford. I had a lot more than this. I go back and forth. I keep 100 shares, but I'll buy 1,000 shares and then sell off 900 and hold it. Because my average was 10 something. And then I got it down to 950 because I bought it at 924, something like that. Anyway, so the price now is $10. My average is 950. I'm probably gonna always hold them 100 shares. What's this? Shopify. Woo! I want it. More Shopify because I do a lot online and I see Shopify. I had a Shopify store. Their user base is growing ridiculously. So I this is all this is again when there was a significant pain in the market. Everything was down. And I actually thought I would be able to get it a little bit cheaper. So I just got one share. I do this a lot to be able to monitor stuff because it's going to be on my radar. I got this one share and I'm waiting for it to get down cheaper. Now you can set alerts that notify you when things hit a certain price as well, but I like to see it on my screen and monitor it because I also like to see the price action, how it moves. When this happens, when there's bad reports that's not involving it directly, how does the stock price move? You know, when it is something said about them, how does it move? So this keeps it visible on my radar that I can see it every day, even if I'm not thinking about it. But because I'll scan what I can see it. That's why I be doing this one share thing here, one share there. But as you can see, this was up a whole lot more, but now it's almost double, not quite. 495. This is another aviation company like that one. They are competitors, and this was way up higher than that one, but now they're about even, Steven. Anyway, enough said about that. I got in at 497, 495. Price is now 664. This is Robinhood thing. I was planning on getting back in. It was already a good deal at 20, but it was a lot of things was a good deal when everybody running from the market. But now that's up over 100%. It's only one share though. $6.33 is what I got in Viking. I used to flip that a whole lot, and I left it alone. They got this. Matter of fact, they gave me this one share. Robinhood, they give you a share. If you refer people, they give you and that person a share. So I'm gonna leave y'all my link. You can use my Robinhood link, and you'll get a free share of stock. I think they still got a deal going on. I started day trading these in 2018, but it shows you when I was day trading it. Then it was a penny stock. It was $2, $3. So that's 8 years. It went from $3 to $29. So all I'm telling you is that, if you plan on investing and holding it, and you go to some good companies, then 9 times out of 10 you're gonna make a lot of money. So that's why I feel it's important to make videos like this and try to get people involved, excited about investing long term. Just put something in there, like even just something, $100. You put $100 in something that goes from $6 and goes up 4 times, and that's $400 for your $100, and you're doing nothing with it sitting there. All right, 452. This was the same thing with them. I started this in 2018, but it's the same thing. I got this share from Robinhood for free after I stopped even selling it. So that's how I ended up with this. And when they gave it to me, it was 452, and now it's at $24. And the same thing, I was selling this at $3, flipping this at $3 and $4 when I was day trading this. I made a lot of money with this stock. Because now, when I first started, it was probably $1 and some change. But anyway, Meta. Okay, I just bought this a day, 2 days ago. I'll show you that chart because this is a good lesson. So I'm up $1 and some change right now. But this went all the way down to 579 yesterday. Now, a lot of people would have sold looking at that. I didn't sell because it's Meta. I already know what's, I've been watching it. I've been waiting. I was waiting for it to get under $600 again to jump in. So I already know. I'll probably sell it Monday because I don't want to hold it yet. But I didn't want to sell it today because it wouldn't have been a day trade. I'll get into that later. But I just figured it was a probability. It was a possibility that it could go up to 6 and some change. And so I was waiting to see what that happened. And it didn't happen. And I just held on to it. Snap, they had a terrible earnings report, and I'll tell you about that later. Again, this one right here is just like a overall big picture view that I'm going on over everything, and then as I go into more specific lessons, then like a lot of the stuff that I'm showing you now, you'll be able to connect the dots with what I'm saying here to what I'll be saying at a later date in future lessons. But they had a terrible earnings call, so just let it come in, soak in your head, and it'll make sense later. But you have 4 earnings calls per year, quarters. The years divided into quarters where they give a report to investors on what's done happened, how they have, basically a report on how the company has done. And a lot of times they give a forecast or what they expect for the rest of the year, and that's updated every quarter. Well, they had a terrible quarter, and everybody just thought, act like Snap was going completely out of business. Well, I know that the user base is growing because I do internet marketing. Um, they had to figure it out. So anyway, I bought it, and this was up to like $20 almost, I think, but it fell back down with all the rest of the tech stock. This is the company that has Timberland, I think. Oh, sorry, Timberland and a bunch of other brands. Man, I really bought this because they had a terrible quarter as well, and it dropped down significantly. I was actually doing a stock video, and I bought this. I bought Nike. I bought something else too at the same time. Really, just to prove a point. Because one of the things I like to say, if there's a product that you love, and I love Timberland boots, then you might want to start there to investigate on what that company is about. Because if you love a product, what's the reason though? If you love a product for some reasons that other people might love it, and either whether it's a cult following type deal or the quality or whatever reason, check reason. And if it's a good reason and there's many others, then there might be value in that company that um, you can depend on. And because of how you feel and what you know, because it's a product you use, your perspective of the company might be different than the average person who might just think it's a good stock. You understand what I'm saying? So you know why you feel the company is going to be around. So this helps you to think for yourself and not care about what the news is saying. Well, I know Timberland ain't going nowhere. And some of the other brands, I forgot what it is now, but I researched it when I looked at it. I was like, oh yeah, what else do I do besides Timberland? And I was like, all right, so I'm gonna buy some of this. This is a good way to make a point when I go to do my videos. And sure enough, it's up a little bit. It was up a lot higher, but I did get 5 shares because I really do like Timberlands. But that was just a proof of point, basically. Clothing, I'm not too interested in investing a lot of money in clothing because, there's so much growth you can get from other things more than clothing. So that's why. Micron, same thing. Terrible quarter. They was in a cycle. They do chips, Micron. So chips, the demand cycle for chips goes up and down. If it's high one year, then in a year or two, it might be very low. The demand is very low because people not buying, depending on what the chips are for. They do a lot of computer chips. So once people upgrade, a lot of stuff change in processors or computers, and everybody get new computers. You can pretty much bet that the next year or the following year, sales are going to be lower. So it's cycles. So they have reported a terrible quarter. The guidance, that's the word I was trying to think of when I say the expectation for the rest of the year. They call it the guidance. Their guidance for the future was real low. Everybody was selling out of Micron. And I was looking at them building the factory in New York, and they're one of the homegrown, they spend a lot of money here where a lot of other stuff's coming from overseas. And I'm like, nah, they got future, they got potential. And so anyway, you see that they're doing pretty good from that point. Bank of California, that's a different kind of story. A lot of banks was going out of business. And again, this is something I was just keeping tabs on. It's like, all right, I'm tempted to buy because it was $1 and something. I'm tempted to buy 100 shares of this and just let it sit and see what happens. Well, but I ain't gonna do it. Let me buy a few and see what would have happened had I done it. Because I don't think they're going under, or at least I think something gonna happen, and somebody bought them. Well, this ain't even the Bank of Californians who bought them. It was another bank that went under. But anyway, and so sure enough, somebody bought them, and the stock is still up from through all that drama. Co-Star, I forgot who they even are. Originally, that's not who it was. But so I can't really say much about that. Akijan, I've been trading ever since these two, Viking and Catalyst. And that's just another one that Robinhood gave me. Same thing with them. Novastera, I don't know who that is. I can't remember what that's all about. American Infrastructure. These are stocks that were given to me by this company. because I've been holding shares of this company for so long, they keep on coming out with these other companies, and that can work in different ways. Sometimes they'll develop another company, and if you're holding a certain amount of their stock or any of their stock, then you get so many shares of the other companies that they come up with based on how many shares you own of their parent company. So that's how I ended up with these. This is their company as well. No, well, yeah. They own a large portion of this. And pharmaceutical, this is a short position. This is what's called a hedge. I had a lot more of this, then I sold it, but they pay a dividend, so that's how I end up with this odd number. But this is the type, see, it's a short. You ever heard someone say short the market? This works inverse of the market. So this is what's called a hedge. You buy this stock right here, and if there's a recession and the market goes down, this particular stock goes up. Or this is the ETF, which I'll explain later. Here's Nike. I bought that when they had a terrible earnings, which they keep having terrible earnings calls. But it's Nike. They've been up over $100. When it dropped down with that terrible earnings, then I bought it. I was like, yeah, this can't go but so much further in the bottom. Well, it went down some more, but I'm not worried about that. Do I think it'll reach over $75 again? Absolutely. I wouldn't mind buying more Nike at this price point, but like I said, I'd rather do technology or something else. It's clothing, and it's not going to go with so much radical movement. This is a weed stock. I got 10, 230. I thought was a good price, and obviously it went down a little more. This was before this Trump got in office, so Democrats much more supportive of marijuana than Republicans. So obviously, if they didn't catch hold and get traction while the Democrats was running things, and it's going to be a little tougher for them while Republicans running things. This is not a political statement. It's just a reality. I don't care about politics the way a lot of y'all probably do. Both of them lie. And anyway, same thing. This Tilray is weed stock. This, okay. Oh, I'm almost green here. But this is the same chance that I took with this one. This is my lottery play. That's what this was. Not profitable, ahead of time, ahead of the curve, you could say. This is artificial intelligence and not quantum computing, but let's see, 5G, integrated circuits, 5G, something else I saw here. They work with defense, space, and other commercial applications. So, to me, this is in a position to have a lot of opportunity for growth. And then you look at some of the contracts they was getting, then I just see it as a potential explosive. Same thing with that chat. They working with the blockchain for, let's see, private social network. That chat messenger and private social network gives users the ability to communicate with privacy and protection. Allows exercise control. Users to exercise control. I'm looking for it to say blockchain somewhere. Well, you have to read it if you're interested. Encrypted messages. That chat. Da, 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 da. And by the way, I got a course about ChatGPT. You can take stuff like this, put it in here, and analyze information just like that. You see? Did you just learn something you didn't know? Is what they provide likely to gain traction or fade away? Market trend to assess whether it's more likely to gain traction or fade away. Growing privacy concerns. I'm sure you're aware of this. They address, that's the point, is they address the issues. Niche cases could appeal reasons that chat might fade away. So it gives you unbiased reality in both directions. Possibility of traction. Moderate but niche appeal. So that's why I said It is my lottery ticket. It's just a lottery ticket. Like it was 287. I got 120 shares. And by the way, depending on the news and what they say, I might sell 100 shares and keep the 20 again just to keep tabs on it and get some of that. Listen, there's been cases where the little 10 shares, the little 20 shares that I keep, the 100 shares pay for it, and the little 20 shares go up 100%, 200%, and I'd be like, dog, I should have kept all of it. But guess what? That's just free money. So why not? You know. Anyway, so you talking about dollars? Most of y'all gonna blow $300 in a month or two. So I don't spend much money. I'll blow money on stuff that people say that you shouldn't buy in stock market. I can't even remember what they do. I had that one share forever. This was a electric vehicle. Does fee, I'm sure you're aware of. This was when I did something foolish. I tried to day trade it when it was already up, like I just told you, way up above the average. And I had flipped it and made some money a couple of times. I tried to buy it one more time because it had been way higher than 470. I'll try to buy it one more time. It did go up, but I was greedy and I wanted it to go up more. And instead of listening to my own voice, matter of fact, I told my boy, I was like, "Hey, look, I just made $400 a day, but guess what? I just bought back in, and this I'm gonna tell you right now, because I'm trying to show him how to invest. I like it's not something you should do. It was dumb for me to do, but I'm gonna see if I can make some more money, and it didn't work. This is what I ended up with. Oh no, it wasn't 100 shares; it was 1,000 shares. So I lost $4,000 on this particular trade, and I only had made like 1,000 in 2 days, and then I turned around in over 2 months. Yeah, about 2 months, I lost 4,000. So, this is why so much stuff has stuck with me because you're paying for a lesson one way or another. You're gonna win some, you're gonna lose some. The longer you do it, the more you learn, the more it sticks, the better you get at discipline. Because trust me, this is gonna stick for a good while. Anyway, American Resources. This company is how you say recycling rare earth materials right here in the United States. You might have been hearing the news about rare earth materials. So this is why I'm gambling on this. I'm gambling with 1,000 shares, a little over 1,000, but I'm hoping this thing pick up some steam. I don't know why. Your boys not talking about it. They're not paying attention to it. When they keep talking about the United States, United States, United States, and worried about China holding back on their rare earth. I ain't heard nobody say nothing about this company. It's one of the only few that got patents to be. Anyway, this is not about that type of thing. Well, I'm telling you why I took the chance on investing in 1,000 shares. So that's why I spent $700 in it. I was in at a much higher average actually. I've been buying this for 5 years as well, thinking it was gonna blow up, but this is under $1 now. They really not making much money. And so again, this is a lottery ticket, and you got to realize that like a lot of this stuff is just hopeful. But I already agreed with myself that it's okay to lose this money because it's a reasonable bet. It's about a 50. This one is about a 50-50 chance on whether it just goes bonkers or end up getting delisted, and then I pretty much lose that 700. It might go to it won't go to zero, but it'll go to $10. It could go to zero though. Lightning motors, same thing. I mean, not the same thing, but yeah, this was a gamble at the EV stage when that was going crazy, and you know how they ended up. Most of those companies went out of business. This is this is not the original. This is not even Nasdaq. This is not a regular market exchange. This is called, man, am I getting old or what? It's called I'll tell you later. Glimpse Group, that's a lottery ticket. I'm gonna go ahead. Virtual reality, augmented reality, spatial computing. Spatial computing is going bonkers. They've been around for a while, been working in this. I think it has a lot of potential. So I buy that lottery ticket any day. I throw $200 in on that Oh, I got a little more than $200 in it. 1,000 or something. Okay. Almost 2,000. Okay. 1,600. Yeah, I take that gamble. And you see here, 1250. The plan, and again, it did go up, but I held on to it, hoping it would stick. But then that was before, that was over a month ago. So that was before we had this nice little downturn. I thought I had time to flip it, maybe for $2, and then get out and hold on to the 250 and just see what happened. But didn't make it. That's how it is sometimes. This network is in not really competition with Netflix, but that's what it does. Exact same thing as Netflix does, except for they do their growth and subscribers kind of rises year after year, but it's about the metaphysical, supernatural, and programming like that. You know, Anunnaki, the lost chapters of the Bible, stuff like that. So I see what's going on, and you got more millennials now that's not affiliated to a religion than there's ever been. And you have this sector of spiritual people getting more and more people. So this, I believe, will continue to grow. They're probably going to be profitable next year. So yeah, if you ask me, this probably be double that next year. I don't know. I have no crystal ball. This is a gamble that I'm taking of $1,200. The Lion was electric vehicle. I ain't mean to click on that. That went way south. Fisker electric vehicle that went south. Indy, they may recover, but oh, you know, that went terrible. And they could go under because they're not profitable either. But they make chips. Lucid, you might have heard of them. That went south. I don't think they'll go under. They got plenty of money, but they got very expensive electric cars, and they're just trying to make it. But so, I know that was kind of long-winded, and I really didn't plan on going into that much details. But I skipped this stuff. Okay, so I got Walmart yesterday. No, I got Walmart this morning. Walmart, I got it 85.50. Is at 85.98 right now. Walmart is 52. Well, let's see. You got to think about it. The problem right now is 52-week high, 52-week low. Yeah. So it's near the 52-week low. 52-week, 58, 56. Oh, 58. Okay. It ain't near the 52-week low, but it's near the low of this year so far. And it's Walmart. It's not going out of business. And here's the thing, like whether the recession comes or not, then people are going to be going into Walmart, and they've been spending a lot of money on AI. They're going to become more profitable. They're spending money on their online sales and AI. So these are the things that you got to look at if you're planning on investing long term, and it helps you even if you're going to trade because if you get caught up in the trade, then you don't have to panic and sell because it went the other direction, like this did on me yesterday, and I just bought back in it today. And it might have been red today, but I didn't sell it because I feel like Monday morning it could be up to $90. Where is it at? Yeah, 86. It could be up to $90, but it might be up to 87, 88. I just got 50 shares, so that's $50. Well, that's $25. That's $100 for every $2 it goes up. Right? Yeah. hmm hmm So that's that, y'all. And this is the introduction to, yeah. So we'll do the charts. We'll do some, either I'm probably going to do, I need to back up and start from the beginning in the next lesson. So the charts is not the next lesson, but more so vocabulary. And then I don't know. I just got to think about it. This was kind of like something I've been putting off and just decided to do today because it's kind of like such a mix of different things to go over at a high level that includes today into sentiment about the market in general, that is just like a prime time to do this type of a video as an introduction to investing. I'm going to leave a link in the description for Robinhood. and you might want to go ahead and open up an account, put you a few dollars in there so that if something happens and if the market goes even lower, you can. If Walmart goes below what it went today, it's something that is very safe to get into, especially at this price point that you'll see. Maybe let me show you what Walmart was at. Just 1 month ago, Walmart was at 97, 98. Just the beginning of the year, it was down here to where it is now. So you can be able to get it down where it was at the beginning of the year. But at one point, it was at 107, 105. Now, let me show you what's this. April 2023, 2024, it was at 60. Imagine if you would have got in then, 59 April. So that's what I'm saying. Like, if it drops even more, I mean, right now is a good deal. Think about where it's going to be next year this time. So if it drops even more and your money is in the account, you can go and get it on wholesale. So that's the deal. That's how it works. Now I'll probably sell it next week and take the chance on getting back in again. I'm probably gonna sell Meta Monday and see if I can get back in again. Because I think it's just gonna be some volatility for the next week or two. And so I just like playing around. To me, it's like a game. The stuff that I'm holding on to. This I got another account as well. And full transparency, this one is bigger, but I do all my playing out of this account. The stuff in the other account, I just let it sit there and I don't mess with. So this is what I do in this account. You know, in the other account, I got some XLK, I got some Apple, nah, Nvidia, I got some PayPal, which I should have sold, some other stuff. But all right, I gotta go. Thank y'all for watching. If you want more videos, then like and subscribe. And if you got questions, ask the questions. I don't know what video to make next.